Good day, ladies and gentlemen. In this video, I'll be teaching you a very powerful strategy that you can actually use in the forex market. Okay, and what you need for this strategy is not really much. All right, so you just need to pay attention. The very first thing you want to see is a particular part of the chart where you have selling balanced by buying. Okay, so the idea is it's going to look like a V shape. All right, or in some other cases you're going to have buying balanced by selling. That's the first thing you need to train your eyes to see. So this is going to look like an inverted V, while this is going to look like a normal V shape. Okay, so once you have that, the next thing you want to see is a break of structure, which is caused by same color candles. So you want to see same color candles pushing to break structure. All right, so it's either going to be same color candles in the upward direction or same color candles in the downward direction. So when you see these two things, first is the V shape with an aggressive move which breaks structure. Okay, that's the first thing you want to see. The second thing you want to see is that leg where you have that aggressive move. You're going to see what's it called, you're going to see an order block or a supply zone along that leg. Okay, so you have something like this. Along this leg you're going to see an order block or a demand zone, that's if you're buying, or you're going to see an order block and a supply zone when you're selling. Okay, so you're going to see an order block around this region or a supply zone. Now, something else you need to pay attention to is, in some cases, you're going to have more than one order block along that leg. So that might bring a little bit of confusion. So in a situation like that, we can't perfectly predict which order block is going to turn price around. So what I usually advise in such situations is just pick the extreme order block. So picking the extreme order block implies that if you have something like this, let me give you an example so you understand what I'm saying. You have this V shape and then you have this aggressive move like this. You have an order block sitting right here. You have another order block sitting right here. This is the order block to pick, the one that is the extreme, the first order block that forms along the aggressive leg. This is the one you should be looking to trade on. You can place a buy limit right here, okay, waiting for price to come down into it and push. So in some situations, price can decide to take liquidity from this order block above and just push up, meaning you're going to miss out on the trade. So it's better to miss out than to place your buy limits right here only for price to go down and then come and activate this order block and push in your direction. So there is no way you're going to enter a trade from here and then say you want to place your stop loss below this first order block. Your stop loss will be too big. Okay, and what if price just decides to do something crazy? Probably there's a news and it just goes and even clears this order block. So you have to play safe. All right, so just go with this first order block. Even if you miss out sometimes, all fine and good. Okay, so I think a few examples are going to suffice to actually buttress how this system works. All right, so I've drawn some things out already. So what do you see here? We have selling perfectly balanced by buying. So what will make you know that you got the system right? These red candles are going to be back to back. Okay, there will be no breaks in between them. Can you see that you just have fresh selling, nothing in between, then fresh buying, good, and there's a break of this structure. Hope you are following. You have the break of structure right here. Now along this aggressive leg that is pushing upwards, the first order block that forms is what, or supply zone is what, demand zone rather, since we're buying, is what you're going to be using. So I'll place two horizontal lines to depict that order block. So this is where I want to buy from. You can see that other blocks were formed. You have one here, you have one here. These are zones that can reverse price, but I'll choose to trade from this one, meaning I might miss the trade if price decides to bounce from here. I'm good and okay with that. All right, so let's see what played out. Price tapped right into that order block and pushed in the upwards direction. You can decide to take your trade, take your profits at the level price got to before returning to your setup. Okay, so 90% of the time this is going to be cleared. Okay, that level is going to be cleared because it's more like price is coming into internal liquidity, and from internal liquidity price will go to clear external liquidity. All right, hope you understand that. Okay, so that's my first example. Let's proceed to another example. I think I have about 3 examples for you. Okay, this is a sell example. All right, so what do you see playing out here? We have buying balanced by selling, and structure got broken to the downside. Okay, so look at this order block that was formed along this push is what I'm going to be using, but the problem is another zone was also formed. You can see this bullish candle in between bearish candles. This is another zone also, so I'm going to mark out the 2 zones. One of the zones will reverse price, but like I said, for me I would prefer to always trade with the first one that forms, because the next one that is formed could just be price trying to create liquidity. So some traders will enter at that level only for price to go past it, but in some cases you might end up missing out on trade. So let's see what played out. Hope you can see market pushed and reacted from the second order block and did not come to this first one. So if I were to take this trade, I would have missed out because I'll be waiting right here and price reversed from here. Okay, so you can see the way price pushed in the downwards direction without giving me an opportunity to enter. So basically I'm okay with my account balance being, protected, rather than jumping into a trade only for it to push past it and hit my stop loss. So I have another example right here. You can see selling properly balanced by buying. Okay, selling properly balanced by buying, and then you have this big push right here. Okay, so what do you have right here? Right here you have a zone. This is like a demand zone. So this last bearish candle, I can mark it out and wait for price to get there. Let me see if I have horizontal lines already, so I don't get new horizontal lines. So I'll mark that out like this. So I'm trying to mark out the last bearish candle right there. Okay, so I'll simply wait for price to come back there and I'll be taking my trade. My TP is going to be the extent price went to before returning to my setup. All right, and you can see price tapped into my setup and pushed to clear the take profit position. Definitely you should already know that stop loss should be below your zone. Okay, a few pips below your zone, and this would have given us up to 1 to probably 2.5 for 3. Let's say 1 to 3 risk to reward ratio. All right, so basically if you got any value from this video, please subscribe to the channel and turn on the notification bell. You got questions, you can ask in the comment section. Turn on the notification bell. I'll see you in the next video. Thanks for watching.